The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, come on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin. Glad to be back right here at TFNN.com. And had a great time out with Tommy O'Brien Jr. out there at Las Vegas here at the Caesars Palace at the Money Show. And just had good times. I got to catch up with a bunch of traders and have some fun in the markets while I was out there as well. Let's check it out where the markets are at right now. We got the S&P up 1.75 with the Nasdaq up 8 points. Russell is up 2.3 with the Dow up 35. Gold's currently down about 5 points on the day. Silver is pretty much flat. Copper's up about 0.3%. And we got oil down $1, down about 1% there on the potential resolution there in Iran. So that obviously dropped the price of oil. And then going on into natural gas. We got natural gas up about 0.4%. We got corn up $2, which is almost 0.5% there. And we have soybeans pretty flat on the day at the moment. Of course, a lot of volatility inside those intraday numbers. That's just close to current right now. Looking on euro dollar, we got down 45 pips with the pound dollar down 68. Aussie dollar's down 17 with the euro yen up 9 and US yen up 42 pips on the day. Pound yen's currently down 25 pips, so being the weak one of the bunch there. And looking on over at the dollar CAD is up 39. Dollar franc is up 51. So, dollar basically stronger across the board, along with the markets moving up as well. All right, well, that gets us caught up right there. Let's go ahead and check out what news we have to expect for this coming week, which obviously there's not a whole lot. It's just one of those weeks. It's a holiday week, so you're not going to have a whole lot on your plate and a whole lot of news trading opportunities, but there are a couple. And, regardless, you always need to be aware of what's coming out because it can impact your trading. We had the S&B chairman over there in Switzerland. He was doing a little speech today. So, obviously, that can have a slight impact on the dollar franc. This morning, we had pending home sales come on out of the U.S. They came out at 10 a.m. at a negative 0.6% on a 2.2% forecast. So, that number is obviously very bad compared to the forecast. However, the last result that came out was negative 5.6. Okay? So even though the number is bad, it's better than it was in October. And, if you want to look at it, get really detailed, you can go back and look at, well, what was it, this time last year? It was at 5.2. So it's worse than last year. It's worse than expectations, but it's better than last month. It's actually the best reading we've had. Looks like since, what do we have, August. So best reading, actually, I guess that's July. And also they revised the number up. So that also cancels out a little bit of that impact right there. It's usually a pretty high impact report, but that cancels out some of that simply by having, again, the exact same report coming out. Or when the report comes out, they revise the numbers, and the markets tend to be really, really sensitive lately to what's coming out on the revisions. So, and obviously there's always a bit of emphasis on the revisions. I've just noticed over the last 3 or 4 months or so, the revisions have played a really, really heavy impact in each one of these trades that have been popping up. And the stats we had on that one, we can go through, we can look at that, but it wasn't really just a big mover, not one that I put a lot of emphasis on. And I'm looking over the stats. Really, even though it's rated heavy impact, really not a usually very heavy impact trade in and of itself. Not even really a stat tradable. So, in and of itself. And then we can go in, let's see, what else do we have that we're going to pay attention to? There's really only 2 reports, by the way, on the roster for the week that you need to be really aware of. And that's Wednesday. We're going to have the UK quarterly GDP. And but that comes out at 4:30 a.m. So remember, Thanksgiving holiday is going to sort of throw all this stuff off. And then we also have the Canada GDP on Friday. Now, that lower liquidity from the U.S. being closed could add to the volatility because it doesn't take as much to move the market. So sometimes you can get some really good volatility around those news trades. Overall, though, the dollar CAD being one of the highest impact reports consistently here at the end of the week. Still not a great trade. And I'll go to the stats for that a little bit later here as we walk through each day of the week. But, yeah, it's literally like 57 pip range with a 41% probability of even hitting 50 pips, meaning it's basically going to hit like 40, 30 pips the majority of the time. And then, but then it'll hit like 60 or 70 pips, maybe like 40% of the time. So just the overall averages, it doesn't really come out to your favor. So really not a great trade overall. And then I'm looking over at the pound. On the pound dollar, what we have is we have about a 70. That's probably our best trade of the week. We have a 70% history over the last 5 years of it hitting 50 pips, and the average range is 70 pips. So again, the one thing to be aware of is the Thanksgiving holiday. It can either completely stunt the effect or it can magnify it. So it's one of the things you get in. If the number is off, you're going to enjoy that ride. And if it's not off, you're going to be going for break even within 5 minutes or less of that release. Okay? So, but that's really your one trade for the week. Is going to be that pound dollar Wednesday, 4:30 a.m., 70% probability of hitting 50 pips, 70 pip range high to low. So that's literally it. But with that, let's go ahead and we'll just walk through the news for the week to see what there is on the roster so you can know what to be aware of, because you still want to be aware of news, even if you're not trading it. You want to be aware of, okay, well, what is there out there that I just need to know is coming out? We're going to have building permits coming out tomorrow. So expectation of 0.94 million comes out at 8:30 a.m. here in the U.S. Along with that will come out housing starts, and so they'll also be releasing the September data. So on the building permits and housing starts, and but very minimal impact on that. The main number is the building permit number. There'll be an inflation report meeting come out as well on the pound at 5 a.m. tomorrow. So starting off tomorrow morning, 5 a.m., the pound dollar has their inflation report hearings. That can have some impact on the market. Not really a measurable, tradable event, but just one to be aware of. Could add some volatility of the pound for you if you're an early morning trader. And then again, building permits at 8:30, along with housing starts. Then we're going to scroll on down at 10 a.m. We're going to have the consumer confidence report. Expectation is 72.2. And so that'll be, they'll be watching that because obviously the importance of that right now is the holiday season. How confident are people to go out there and to spend money on the holidays based on government shutdowns and budget talks and, Iran stuff? I mean, you start going through the list, the whole gambit, gridlock, all these different things are happening. What kind of confidence do people have in the markets and their job stability? That will highly impact how much they're going to spend for Christmas. And so everybody will be watching those numbers. They'll be watching the Black Friday numbers as they roll out, everything else. But consumer confidence will sort of be that leading indicator going into this holiday weekend and these Black Friday sales. We're also going to have trade balance on New Zealand dollar coming out at 4.45. So that's Tuesday right there. Now let's step on into Wednesday. On Wednesday, we're going to get a second estimate GDP at 4:30. Okay, so Wednesday, that's our revised GDP or second estimate GDP, so whatever you want to call it. And again, that's 4:30. Again, that one was the one that has a 70 pip range with a 70% breakout of 50 pips. And usually the spike is about 30 pips. So it'll spike like 30 pips. But if that number is not off, use that 30 pips to bail on the trade. Okay? So that, like I said, that is your one real news tradable event for the week. We're also going to have at 8:30, you're going to have core durable good orders and unemployment claims and durable good orders coming out at 8:30 on Wednesday morning. So that'll, add a little bit of volatility into the trading day there. And then we'll go on down. Let's see. We'll have some retail sales numbers out of Japan that night at 6:50. Australia is going to have a business confidence report coming out at 7 o'clock. So that could give you that's Australia have their business confidence report. That's all A and Z and thinking Australia. So New Zealand is going to have their business confidence report on Wednesday at 7 o'clock. Australia does have their private capital expenditure quarter over quarter. Usually not a big mover at all. So not a massive mover in and of itself, and it's usually off by a lot. But it's one worth looking at and looking for some potential volatility just to do some potential directional trading on the event. And let's see, let's scroll on into pardon me, Thanksgiving holiday there. We're going to have, Forex is still open, still trading, right? So just the U.S. has the bank holidays. Again, I'm not trading. Hopefully you're not trading. You're staying home. You're just checking out. Just let go of the markets for a day. I know it's hard to unplug, but turn the phone off. But anyways, looking across, seeing what's coming out. We got the freight coming out, the GDP quarter over quarter, 1:45 a.m. And we'll have like German unemployment claims and preliminary CPI. And then we're going to have the Italian 10-year bond auction. So, of course, if that was a big surprise, then that could have an impact on the euro. Governor Carney's going to have a little talk right there at 5:30 in the morning. And so you're going to have some euro and pound volatility happening with the U.S. closed. With that lower volume can come increased volatility. And let's see here. Canada has a few minor things coming out, nothing even worth looking at. Japan has a whole slew of things coming out that night. So Thursday evening, and Nadex does open back up on Thursday evening there. But Thursday evening, at 6:30, we're going to have housing spending, Tokyo core CPI, preliminary industrial production, unemployment rate. So all that coming out of the yen starting at 6:30, actually starting at 6:15. They start releasing reports. So there could be some good yen volatility coming out late Thursday evening going into Friday there. And again, starting out at 6 o'clock. And then Australia has a private sector credit medium impact report. A lot of medium and small impact stuff this week. And then Friday, looking at everything on the board, there's really nothing except for the Canadian GDP month over month. And again, that's usually not your biggest, best trade. Average move 57 pips, but only 41% of the time. So if the number's off, we're going to get a massive move. And if it's not off by, several percent, let's see, what are we going to be looking for? If you want to trade that, you want a deviation of at least 0.3. So if the expectation is 0.1, you need a 0.4 or a negative basically a negative 0.98 there, but you need a negative, 0.2 actually. So either a negative 0.2 or you need a 0.3 on that trade, or there's nothing. Like, it's not moving. So I'm going to avoid that one. I'm not even touching it. I'm taking off Friday, whatever. But the one trade, like I said, is that one GDP report there on the 27th. That's the one to focus on this week and avoid the rest of the news for the week. So just be aware of it, okay? So could be a lot of good butterfly opportunities this week. Could be some flat markets as we go into the holidays. And let me see what all we got here that you might be able to do and take advantage of. But we might, that's pretty much it. I was trying to see if there's just anything else I could come up with. But that's really the summary on the day and where everything's at right now. So now let's go ahead and let's check out the deviations. So on this Monday holiday week and see where everything stands. And now we got the Aussie dollar, and it moved down to one deviation overnight. So nice one deviation move before bouncing right off of it and pulling on back into the morning. So just a really sweet, perfect move right there on the Aussie. And had some good evening trading along with some good early morning trading, but now just flat. So butterfly territory. All right, stay right there. We'll be right back after this break.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzamento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome back here to the Diagnostic Trading Hour. So, anyways, just doing some market wraps, walking through where everything's at right now. So we just covered the Aussie dollar. Let's go ahead and dive into the euro yen, see where it's sitting at right now, and not just where all the markets are at. There's a lot of, it's a lot of trading opportunities if you'll learn how to use these deviation levels, if you'll combine them with volume spikes. Like I said, it can provide a lot of different ways to trade. And, I know sometimes people get a little bit confused when they're trying to figure out how to put it all together. And so I wanted to, also as I'm going through, as these charts are loading up, give you a couple examples of what I mean and how to do this. I showed how to do it last week on Ninja, but to show you how to do it sort of on Thinkorswim, I'm sure you can do chart overlays, but there's a lot of different ways to do it. So thought we'd pull up a chart real quick and sort of go through, if you're using deviation levels, depending on how you're using them, how to put them together. And let me open that up for you. And we grab whatever level we want to. Okay, so let's say we just grab US yen. Turn off everything, and we'll go over here to them, and what we'll do is we'll say 6J. Actually, we'll go Aussie dollar. We'll just stay with the same pair that we were just on. I'll make it easy. And over here we'll do 6A, and then we're going to get rid of any of our little active trader buttons and stuff. Okay, so now we'll zoom on in. We're going to make sure we get the same size bars, and all these heaters on now, right? So going over here, going to look at them, And then we have the diagnostic scanner. And so whether you're auto charting or, however you're going through and plotting everything, but you can pull them up on the deviation page. You can scroll down. You can find the Aussie dollar. Okay. And look at those levels. And then you grab those and you use the price level marker. So if we say, okay, well, 91.80, and you go find that price, it's way up here from Friday. Okay, that was our settlement right there. And then we can go, okay, what's the next level down? We simply go, okay, 91.49, so you can get right there. Go next level down, 91.36, like that. Then you go on down to 91.18. So if you just want to keep, you really don't need to plot any additional levels until that level's hit, right? So if we hit 91.18, then you can go back in and plot it. But until then, don't really need to worry about it. Anyway, so it comes on down, and it's hitting this one deviation level down here at, let's see, what do we got? And like I said, you can use Ninja or you can use Thinkorswim, but 91.18. And let's back up to show you the entire chart. So right there, you want to extend that out a little bit. And then you can draw, like I said, one more level. Once it gets hit, you can add in the additional level of 90.86. You want to put that on there, okay? All right, so it comes down, it hits this level, and that's where you're going to come over when it hits this 91.18 over here. And you can draw it on both of them if you want to. Notice I have the futures and the forex side by side. So, of course, that's completely optional, however you want to do it. But you can go down and go, okay, 91.18, which it was basically like right within 2 ticks of. So right there on the spot forex. Remember, that's what the levels are. They're actually plotting the spot FX. Now, we do also have them on the futures FX. But if you're trading Nadex or, maybe you're trading spot, you can do it. You could just plot one side if you were just doing futures. But 91.18, and then we can go on back up from there. But let's see, we got 91.18, then we go on up to 91.36, right up here, and then we're going to go to 91.49. You'll see why I'm doing both here in just a second. And then 91.80, okay? And if I want to throw the one above it, I could always go up here and go to 92.11, being the level above. And now I can bring this over and look at, okay, when it hit this level, were there any potential volume spikes? And so that's what I'm going to be looking for on those deviations, especially those one deviation moves. And so you can go over here and you can zoom in on these parts. And this is ultimately, I'm trying to look for something like this. Like right there, that's a volume spike. And now you can do in the money, out of the money, or what I call double binary. You can do either one. Okay? So right here, when it hits this level, we got a nice, volume spike. Let's see, right, there's one there. Let's go down to the one deviation is the one we really like to focus on. And so right in here, that's basically the best one we got. It's coming right there, just within a few ticks of the line. And I'll show you how you trade that with Nadex when we get back here in just a second. Okay? Stay right there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so what we're looking at over here is just trying to compare some of these potential plays and see if there's a lineup between the two. So I can show you what I was talking about applying this. So let's say you have Think or Swim or TradeStation or whatever. You don't have to have any specific platform to do this strategy, though it does make it easier with Ninja. But you can do it really any way you want to. And what I'm talking about is like on Forex, where you're applying the implied volatility-based volume spike reversal trades, okay? So this is when we reach a statistical expansion point in the market, and it's not expansion based on yesterday's volatility or how far the market has moved. This is based on how far the option pricing says that the market is going to move today. And the reason that these levels are so incredibly accurate is because, again, they're how far the market says the market is going to move. And when you have the market telling you what it's going to do and you're listening to that, that obviously can have a lot more merit. And so I'll go over and I'll look at these on both futures and forex lines. I'll look at it on 5, 10, and 15-minute charts. And I'll use the volume on the futures to help me with the direction on the forex. And I have a couple ways I can do it. I can just literally trade the underlying market with a stop loss and control my stops. I could go in, I could trade spreads, going directional with that on the Nadex, if I can find a good low-risk spread. I can also do out-of-the-money binaries, targeting the next deviation level. Or I could use in-the-money binaries, so that way the market doesn't have to move at all, and I can still be profitable on the trade. So you'll only get 1 or 2 opportunities a market a day to do it the way that I'm going to teach you. Only 1 or 2 a day per market. But there's 2, 3, 4, 5 markets now. They have added so many in over on Nadex. So there's a lot of market opportunities. So you could literally be talking as many as 20 to 50 trades a day, just literally waiting. Here's the only thing you care about. Does it hit the deviation level? If and when it does get close to a deviation level there, then do you have a volume spike? So I'm watching volume spikes. I'm watching deviation hits. And when the two sort of come together, especially on FX when it's across the board there. So I'll see right here, as an example, on the Aussie dollar, we had this volume spike. I'll maximize that chart for you a little bit. Make it a little bit easier to see. So yeah, the volume is obviously much higher. It is well more than double on both sides. And we're right here down at a deviation line, especially over on the FX here. So we're right down here, right just hitting on this deviation line right here. And so when that happens, then that's when we're looking to either target this next deviation level, okay? Or we could do an in-the-money binary and buy one, below the level down here. So like our level is 91.18. We got a buy signal right here. We could have bought like right down here below 91.20. And just let it be a higher risk, but a higher probability, because if the market just stays above, then we're profitable on the trade. Moves up, obviously, if you would have done in the money, if you would have done spot, if you would have done futures, if you would have done even out of the money, or even a spread on Aussie dollar, all 5 of those would have been profitable on that trade up. Well, then it does a retracement. It pulls up a full deviation from low to high. Okay? So we get that deviation move, and we get another volume spike right in here. And so on this volume spike, again, I'll zoom in on that one so you can see it a little bit better. Right here at 10 a.m. So we're looking at this volume spike right after it's come up. And, I mean, you could also call this one the volume spike at 9:30. There's a couple of them happening. And, again, I won't look again for right around these deviations. It doesn't have to be like it hits it and then there's this volume spike. So in this case, there was one. Again, but you want to have some room. So give it a little bit of room. If you do the in the money. If you do the out of the money, then, just, again, target the next deviation level. And the closest one you can get at a good risk reward. And so we got one right down here. So you could have targeted this deviation, closed it when it hit it. You could have done it in the money binary. You could have sold the Aussie dollar spot. You could have sold 6A. Any of the above on these volume spikes. So right here is a volume spike. There's another pretty massive. I like it when you really get a, I guess a way to help you quantify this. When you really visually see that is a big volume bar. Even because some volume bars may qualify as volume spikes in the sense of both bars on each side are higher than the bar in between them, or lower than the bar in between them by half. So you have like, say, 10,000 on one, 10,000 on another, and 20,000 in the middle. But a real volume spike, the kind that I get, I guess you could say, excited about as being a very high potential trade setup, is when, it's clearly a volume spike among all volume for that day. So look at this one right here, like I'm talking about right there. That's a pretty solid volume spike, right? Because that's really high volume comparatively. So, and then we got, like I said, we got one right here. That's a pretty nice volume spike right there. So we have volume spikes throughout the day. And you just want to make sure you're going counter trend. This is a counter trend. This is a contrarian trader. Now, I love trend trading. I trend trade all the time. But this is one of the ways I look for counter trend. And where I expect the market to go up. Now, just because it's went down for a few bars doesn't mean that I don't think that it's going to continue not to go down. So, this one right here happened on this drop. But again, this is bouncing off of a 1 deviation move. So notice how that volume spike happens. It does do a pullback, but then we get another volume spike over here, and it keeps dropping on back down. So start just paying attention to those volume spikes. Even if you're a spot trader, by the way, don't pay attention to spot FX volume, like on Ninja Trader, MetaTrader, etc., because that is tick volume. It's how many times the price changed during that bar. It's not how many contracts were traded. It's something that a lot of new traders don't know. Even traders that have been around for a while don't know. If you want to see futures, or if you want to see Forex volume, look at a futures Forex chart. That's one of the reasons I don't use MetaTrader, is because very few brokers actually plug into it with futures. And so I like using Ninja, TradeStation. Obviously, Thinkorswim is awesome. I'm even starting to play with MetaTrader, and look at that. Because it has a lot of cool features, like I can get the router's data feed for FX. There's a lot of cool things you can do with it. But anyways, but look at those, and again, compare them side by side, but make sure you are looking, if you are a spot trader, make sure you're looking at the futures volume to help you identify those volume spikes for potential trading opportunities. And, sometimes they'll line up great, they'll look awesome. Other times, they're going to seem sort of useless to you. Like, you're just going to look at them, you're just going to see volume spikes, they're nowhere near deviations, nothing's going on, that's okay. You're looking for the right setup. I mean, like I said, if you can get 1 or 2 of these a day on a market, right? Think about that. If you can get 1 or 2 a day on a market, and you can filter out half of them, okay, as ones that just weren't quite exactly what you're looking for, that's still 25, okay? So, and I mean, you could also apply any other filters you wanted to it as well, whatever your trading personal preferences are. But obviously, if you can go in and do that, that'll help you out a lot as a trader. But we got Euro Yen. It's we'll go ahead and do a quick market wrap on it, and it had a pretty interesting move right here. But we got to move basically up to 0.7, which was a 1 deviation move high to low. And I always remind people of this when they're looking at deviations. Make sure you look at that high to low. So if I measure that 1 deviation move, I get 81 pips. So if I go over here and I measure the low, where it came down below settlement, right, and then went on up to the high here, I got 96 pips. So it was well past that 1 deviation move. So we're definitely looking for a, reversal trade on that. Now we can go in, we can look at euro dollar. And by the way, the only way that I do look at volume on FX is if I have an aggregate data feed of like 30 or 40 brokers. So that's one of the data feeds I get from my Forex. I compare it now still to my futures volume. But you'll notice, I'll show you this. This is sort of cool. They'll be very similar if you use a true aggregate volume data feed. And there's, some bonus lessons here on FX today. But let's see what we got. 6E, 12, 13. We're still on the December there. And let me update a couple settings. Make a match. Let's see what we got. 5-minute bars. So we'll look at minute bars. We'll get 5 minutes. And then I'm going to get rid of one of my tricks I'll do is I'll make it transparent on the bar. Okay, so right over here. I'm trying to get all this to fit on this little screen here. Transparent. Okay. If I can spell right. There we go. And that'll basically, because I don't really want to see the bar. Okay. So I already got my bars right there. And so once I do that, now I'll close this window out. I'll shrink that down. And then I can add in. Okay. And then we're going here. Oh, and then I'll change that. That's one other thing I'll do is I'll make sure I change this always. Make sure you have the same session template. So you don't have gaps and weird stuff going on. So right there. There we go. Okay. And now I'm going to go in. I'm going to add in the volume indicator. So I'll go down here to, volume up, down. All that means is show me volume. Green when the, bar was up, red when the bar was down. But I'm going to assign the volume to my futures contract. Okay. So again, we can take that and move it down there, move that down. Let's shrink RSI out of the way. And by using an aggregate data feed, you'll be able to see the volume is very similar. It's not the exact same, but it is very similar. I'm able to see, this is futures, this up here is euro dollar, and I'm able to see a pretty similar reading. And one of the ways I know it's an aggregate data feed is look at the quantity. Like, 100 million, 37 million, so 200 million. So I'm pulling in actual aggregate data feeds on FX Spot from multiple FX brokers and vendors. So that is one way to do it if you want to just use one data feed. You got to pay more money for that. But if you want the free, cheap, and easy method, just simply use, notice how, again, they're very, very, very similar, okay? So you're not really missing anything by using just the futures volume. But you are missing them if you use just a standard single broker FX tick data. That's just a shot in the dark, okay? You want to have real volume of some sort, somehow. And the simplest way is using the futures volume itself whenever you're doing these types of trades. And so you can go over here and you can go, okay, so we're looking at the euro dollar. We're looking for a move to one deviation. And notice how we get really close. And, you know, if we go and we really measure, we probably got, yeah, we got a few extra pips there above, okay? And we moved on down. So very close, and then we do get a volume spike. Get a couple of them right there. So there's a perfect one right there, right into that. Turns around, pulls back up. You can target the 0.5. You could target the, or 0.7. You could target the 0.5 potentially as well. Just make sure you give yourself enough time. Or you could just do a simple in-the-money volume spike deviation reversal trade. Again, that's where you go and you buy like the 34, 80 contract and try to collect at least $25 in premium. So it means buy for $75 to be able to make $25, and just let the thing go flat or slightly move back up. And the biggest key is focus on that deviation level. You can go in, you can play with it, you can sort of swing, shoot from the side of the hip there, and go for halves and 0.7s and everything else. But I found it's best overall. I try to really focus on those one deviation moves, whether it be one or one from high to low, or a negative one, or a negative one back up to settlement. I'll play it as it bounces off both sides. Okay. So, but anytime I get a one deviation move up, one deviation move back down, one deviation move down, that's my strongest signal of the day. Okay. And that's the ones I prefer to do. And it doesn't have to be, don't become, in trading, you need to have a system that guides everything you do, but you also need to have, a little bit, relax a little bit. Don't worry if something is not exactly 3 ticks or 4 ticks away. We got 31.84 in the low here. We got a 34.89. Okay. And it amazes me how people go that's crazy over, you come in and you really want to be you want to be that disciplined trader and be so rules based. But it's when the setup lays up and it looks right, I'm not going to worry about a few ticks. I'm not trying to jump the gun. I'm just saying I got the volume spike. I put in a few ticks of the deviation level. It's doing exactly what it should do. I'm taking the trade. Okay. I'll even have this on what I call a BMX reversal. And, my standard is 3 ticks from the high. If it enters that zone, but it doesn't break the high, then I'll look for a reversal trade. And, but that's the standard is the guiding system. But if it's hitting that level over and over and over and over and over again without breaking it, but it only hits say 4 ticks or 5 ticks, but doesn't exactly hit 3, you're basically looking at double tops, double bottoms. All right. And so look for that reversal just as if it were. Don't get caught up specifically in the exact tick. Have a guidance of ticks so you have an idea of what you're looking for. But if it's a few tick difference, but the setup looks just right, that's your trade. And so euro dollar came down right here at 10 o'clock, did a little spike up, came on back down for a minute, and then it's moving on back up past the 0.7, and now working towards that 0.5 deviation level. And had a nice trade bounce off of, like I said, with the choppy market, worn it almost right there at the 1 deviation. So good trade setup. All right, we'll go through. We'll look at a few more of these when we get back right after this break. Stay tuned.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
So traders pointed out to me soybeans, and we were talking about it right there at the beginning of the hour. Barely had moved, but man, this ran on up. So down half deviation, up half, actually at the 0.7 right now. So who knows, man? Maybe we'll get a volume spike up here. Might turn into another good turnaround. So this would be when you start looking for that potential volume spike trade right around that 1 deviation low to high move. So keep your eyes peeled on soybeans for that potential move. Also, talking about Vegas a little bit. We went out there and got to hang out with Andy Hecht as well. And it was awesome. He has some very cool stories. Book coming out, so I can't wait to get my hands on it when it comes out. Sounds really interesting, and you listen to his show, and you'll be fascinated. So that's the least I can say, is you'll be absolutely fascinated by the experience and the things that he's done, and just some of the very cool trading stories. And has a great analysis approach to the markets, and longer, medium term, trader. And but just awesome trading analysis, and a lot you can learn from him. So definitely recommend checking out his show 2 days a week there. And but we all had some fun. We went in, we threw some craps tables down, and I bet against everybody that was rolling dice except for us. And didn't make me popular, but it made me profitable. And so I was doing don't pass, and then Tommy'd be up and I'd be like, oh yeah, pass, and I'd just throw it down. And man, he got on some crazy rolls, and he growls everywhere. By the way, he doesn't just growl on the show. I mean, he's doing that everywhere. So he's doing that at the table. The pit boss doesn't know what to make of him, and all good times. But anyway, so definitely check out those Trader Expos. There'll be another one coming up in February in New York. So I'm sure we'll be out there having some good times as well. So maybe some of y'all will be able to join us. I think it's in February, and it's always in New York City. And so, of course, there's no, don't have all the tables that are really close and easy to access. But there are, there's some ways to get to some out there. But anyways, good times. Let's check it out. We'll do a couple more markets real quick. We'll look over at the indices before we top off the hour here. We got the Russell moving on down, filling in that gap. Look at that. I mean, just bam, right there into the gap. And by when I say that, what I mean is, where did it close last Friday? And where did it hit? Look at it. Hit settlement, bounce. Okay? So I really back off. I usually take profit when a market hits settlement. Being a gap fill, because usually it will go choppy. It may go reverse. And if it goes reverse, you better be ready for that reversal trade, or maybe you just straddle it. I mean, that'd be another thing to do. But be careful in just taking a direction right there at settlement. That can be dangerous because the market's figuring it out too. And we'll look at a few of the other ones here. We got the Dow, and on the Dow, almost filled in that settlement. So 60.33, 60.27. So very, very close. Usually it's the late one in the day to do it. We'll see if it does it today. But after that run down already, I wouldn't count on it. And but it didn't quite fill settlement, but it was within a few ticks. So always watch when the other ones are doing it. That's one thing can tell you that I've learned is on the gap trades is when I see one of them do it, if I see any of the others pull back. Now, I may give up a little bit of my profit, but a safe measure, okay, is if one does it and the other is pull it back, is to just close them out. And usually will grab a profit at least without giving it all back up. So if you want to hear you went short, like you bought a 3420, sold a 3420 binary, then comes down, it doesn't fill. Now, it should have filled for you if you had your take profit set how I teach, but like at the 57 rule. But if you didn't have that set, if you were waiting on it to hit it, and it bounces back up, and Russell's already hit it, it's time to get out, okay? ES also very, very close. Right there, we'll pull that up. See that went down and just sort of oscillating around. Now it's getting some flat, very range-bound markets. I mean, look at that, 18.0, 5.25. I mean, it hits that top 1, 2, 3, 4, 5. So we got six bars right now sitting right at that level. So let's try to figure out where it's going. Anyways, y'all have a great day. I was glad to be back on the show, and it was a lot of fun. And I look forward to talking to you tomorrow right here on the Diagnostic Trading Hour at TFNN.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.